What is the Consumer Price Index? What is its use? If you have been watching the news, you may have heard this, but don't quite understand its role. Today we will try to simplify the Consumer Price Index, or CPI, how it is used, and what role it plays in the economy. Price increases typically occur in quiet ways that go unnoticed by us. Inflation is the name for this. Most basic costs are the same for everyone. Therefore, tracking price fluctuations over time allows us to gauge how expensive living has become. The Consumer Price Index is used to determine retail inflation in the economy by monitoring changes in the cost of the most frequently purchased products and services. In other words, the Consumer Price Index determines how much the standard basket of goods and services has changed in price. A market basket is also utilized to calculate the price changes in fixed items. The market basket, the weighted average of those products and services, is what the CPI uses to determine price increases because it reflects the most widely utilized commodities and services in the economy. Products linked to food, clothes, transportation, housing, electronics, apparel, education, medical, and other areas are included in the basket of goods. A country's population's cost of living and changes in its currency's purchasing power can be determined using the CPI. By averaging the prices of the commodities included in the typical basket, CPI tracks changes in their prices. How is the CPI determined? The Consumer Price Index, or CPI, compares current prices to those that prevailed during the same time last year to determine how much prices have changed for a typical basket of goods and services. The CPI calculation formula is the cost of a market basket in a given year is divided by the cost of a market basket in the base year multiplied by 100. The CPI is a commonly used metric to assess inflation in an economy. The standard of living for a country's citizens declines due to rising inflation. It will eventually lead to a rise in the expense of living. A high rate of inflation will raise the cost of goods and as a result, reduce production, leading to job losses. As we go further, here are 6 factors supporting the significance of CPI. Number 1. Inflation estimation. A rise in prices that reduces your purchasing power is called inflation. Your money goes farther than it used to as prices grow since you have to spend more to get the same goods and services. The CPI can provide information on inflation, its trend, and the efficacy of current economic policies. By tracking changes in the prices consumers pay over time for a selection of goods and services. The Consumer Price Indicator, or CPI, is a popular index for measuring inflation. The 8 main categories of these products and services are alcoholic drinks, food and beverages, clothing, transportation, healthcare, recreation, education, and communication. The economy suffers equally from inflation since people have less money to spend on goods and services, or to be more exact, their cash is rapidly losing its purchasing power. Number 2. Deflation measurement. The CPI is used to measure deflation. When inflation goes below zero, the prices for goods and services rise. This is known as deflation. During deflation, purchasing power increases as the money supply likewise contracts. Spending may decrease as the economy contracts, which is typically the case during a recession. Inflation or deflation harms the economy because it makes it more challenging to value-added products and services. Number 3. Cost of living modifications. The Cost of Living Index and the Consumer Price Index are linked. This is significant because the Cost of Living Index establishes annual contribution limits for tax-advantaged retirement plans and Social Security benefit amounts. Employers can raise employee wages by using data on the cost of living adjustments. Number 4. CPI significance in the Forex market. The Consumer Price Index directly impacts Forex markets. Assume you're trading euro or US dollar at a time when inflation in Europe is high. The economy will suffer from high inflation and the value of the euro will decline. Announcements about the CPI take effect later. It takes time, and typically how central banks respond to high or low inflation rates determines the reaction. Because short-term price changes are uncertain, new traders frequently try to profit from brisk market activity. Compared to intraday and news traders, position and swing traders take more time to analyze CPI data. Number 5. CPI determines how much it costs to live in a country. It is because it can affect financial markets and the value of financial instruments. The CPI can have significant impact on traders. It can be used as a benchmark for establishing interest rates. CPI is significant to traders. Central banks may raise interest rates to slow inflation and keep it under control if the CPI increases quickly. As a result, there may be less demand for financial products like stocks and bonds, which can substantially affect the financial markets. On the other hand, central banks might decide to keep interest rates low if the CPI is steady or falling, which might enhance demand for financial products and possibly drive up prices. The CPI may also be of interest to traders because it can shed light on the state of an economy. A rising CPI could indicate an expanding economy with higher demand for products and services. Conversely, a declining CPI may show a slowing economy and a drop in demand. Traders trying to decide which financial instrument to buy or sell can use this information to help them do so. Traders attempting to make educated selections regarding which financial instruments to buy or sell may find this information helpful. Number 6. Labor markets and CPI. To distinguish between fundamental change and change in prices, the CPI and its components are also employed as a deflator for other economic indicators such as retail sales and hourly or weekly earnings. When asking their employers for a raise based on regional changes in labor rates and pricing, employees may consult CPI reports. Be aware that the CPI is produced using national data. In contrast, employees can find it more beneficial to use local statistics to understand their particular circumstances better. Additionally, the pay of some employees covered by collective bargaining agreements could be influenced by changes in the CPI. CPI has a vital role in the economy as it is used to foresee what might happen ahead by looking at the prices of people's basic needs. It is also essential that you know these facts to prepare to manage your financial efficiently. The Consumer Price Index significantly impacts a person's financial life in many ways. It's crucial to understand the inflation rate if you're looking for a new job or attempting to negotiate a raise in salary. You can prevent a fall in your purchasing power by requesting an annual cost of living rise based on the CPI. When making other financial decisions like purchasing a home, an inflation prognosis can be helpful. It might be a good idea to lock in a mortgage. At the same time, rates are low because rising inflation will likely result in increased interest rates. You may improve your financial choices as you plan for the future by keeping an eye on the CPI. What do you think about this topic? Do you agree with me too? Share your thoughts in the comments section below. Don't forget to like, share, and subscribe. I'll see you in the next video.